Correspondent banking is a banking service given by one bank, that we call the correspondent bank, to another bank, which is the respondent bank. What are the services correspondent banks give to respondent banks? They give a wide range of services, including cash management, international transfers of funds, check clearing, and foreign exchange services. Now, why banks need to establish correspondent relationships? Because thanks to these relationships, they can undertake international financial transactions for themselves and for their customers in jurisdictions where they have no physical presence. Large international banks act as correspondents for thousands of other banks around the world. Now, the big question is, why do they say that correspondent banking is vulnerable to money laundering? Mainly for two reasons. One, because correspondent banking relationships create a situation in which financial institution carries out financial transactions on behalf of customers of another institution. This indirect relationship means that the correspondent bank provides services for individuals or entities for which it has neither verified the identities nor obtained any knowledge. Two, the large volumes of transactions makes it very difficult to identify suspect transactions, especially that the correspondent bank does not have the information on the parties conducting the transaction to know whether it is usual or unusual. Therefore, before establishing correspondent accounts, banks must do a thorough due diligence on the respondent banks to protect themselves against any risk of money laundering. This is correspondent banking in a nutshell.